Hello, everyone. Welcome back to CR Investors Daily Review of the Bitcoin. Specifically, I like to watch Bitfinex here, as you can see on the 4-hour chart that I've loaded here. This nice clean chart, if you didn't know already, we'll just do a quick plug for them. I like to use this website called tradingview.com up here. And you can follow me. You'll notice I have a little moniker here. In fact, we can even let's open that up just to start off today's session with a little review of how you can actually follow me on TradingView. You can see a whole bunch of people post lots of charts. Really good site for lots of handy information. Here's my publications. You can see quite a few people follow me here. And you're more than welcome to do so. That way you know exactly when I'm going to update things. All right, back to our chart. Where are we here? Okay. Today, as I said, is Monday, June 9th here, 2014. Did a little cleanup of the 4-hour chart last night. I wanted to try and just make sure you have nice clean levels so you can see through these videos. So a little different perspective here today. Took the 4-hour chart of the Bitfinex. Like I said, 240 minutes on each bar. Gives you a nice clean idea of a little bit longer term. And what I did here today, as you can see, is I took the highest peak that we've hit here in 2014, which was in early January, and I've looked at the price action of Bitcoin basically for the year of 2014, and I'm just wondered aloud, what are some of the messages that we've heard from the market? And I think the most important one here is that as traders, we have to be really patient. We have to wait for good-looking setups, and then we have to act. So, if you were a Bitcoin bull, basically this was lots of bearish market structure with a little bit of a buy signal here back in the beginning of March, but then more bearish structure, and then another little bottom here in early April, and then finally we based out. And what I basically put on this chart, and I published it, so if you go to that TradingView site or if you follow my Twitter feed, you can see this. And really, for any new person to the market trying to learn technical analysis, I would recommend that you just print this chart off, post it on your wall beside your computer desk or whatever, and just say, you know what, I only want to concentrate on markets that look like this, because this is basically a slam dunk trade. I learned technical analysis originally back in the late 80s, and the gentleman that I worked with, he's a big fan of what we call the 50% rule, and that's William Gann. You're more than welcome to go to my website and learn more about Mr. Gann. But you can see that this is the 50% level of this 2014 high down to the 2014 low. So there was pretty good odds at some point we were going to trade back to that level. That was 667.58 here. So, buys down here in the 450, 460 area, that's a 40% plus return. There are a lot of mutual fund managers and hedge fund managers that would be very, very pleased with the annualized returns of 40%. So I made the argument in a posting that I did here recently that you can find on my Twitter feed, that you could have literally just sat and waited since the beginning of January, waited for the nice saucer bottom. This is beautiful, inverted head and shoulders, call it what you will. And nice breakout here, and this trade, just this one simple trade, represented a more than 40% return. You can see that the market has indeed gone up into that level a couple times, so it's not like it had just, it just zipped there once. I mean, you could have gotten your fill there quite comfortably, and literally, you could be done for the year of 2014 for trading. Book your 40 some odd percent profit, and don't come back till next year. It'd be very interesting to see how this plays out, but that is one heck of a trade. And what I just basically posted over the weekend was I really want to concentrate on my efforts on just finding these setups, and just specifically hunting for these setups. Now the issue with that, of course, is that you know, kind of handcuffs you if you only trade one market, right? Because you just simply have to sit and wait for that one market to give you the buy signal. You know, from all the other services that I run on my website, you guys should know that I cover probably about 40 or 50 different commodities. I cover a gazillion different stocks. So Bitcoin is just one trading vehicle in my universe. But excellent, just simple notion that, you know, if you're patient, the market will give you trades, and this was a 40% return on just a nice simple setup. You know, nice bottoming action, nice tradable formation, and nice realistic target that was very comfortably hit. So that's sort of my message for the day. As for what to expect for the rest of trading today, as you can see from this chart, you know, I've just highlighted some current levels. Off the 4-hour basis, you can see we rallied up into this 50% level, so not a big surprise. We should see some consolidation, and that's exactly what we're getting. You could argue that right at the moment we have a little bit of a channel, excuse me, a coil, not a channel, a coil forming here on the 4 hours between these two extremes, and price action is getting tighter and tighter and tighter. You could argue that, you know, just as this breakout level here was a nice buy signal, and then this breakout through this trading range here was a nice buy signal, we'll get our next indication as to which direction we should expect price to go on a break of these two indicated levels. So on the 4-hour basis, you know, bullish resolution through 672, which would basically be confirmation that the 50% level is legitimate. That will set up our next move higher. And as you can see off of just this move from January, if I was an institution and then I was thinking of shorting against this rally, where would I most likely want to consider doing that trade? And that's this concept of the optimal trade entry, or OTE, and that exists between the 61.8 fib and the 78.6 fib. And you'll also notice that, you know, if price does get up into here, there's lots and lots of traffic for it to fight against, so really not a big surprise to see maybe us take a stab up in there. That, of course, is totally predicated on how we resolve through this short-term consolidation. You can see late yesterday evening, I guess as China was opening up and the Asian markets were getting going, we did take a nice serious stab down at these low levels. And what I found really interesting there was that they did take a stab down to 639.07, but they did not break that 637.01 level. So still watching these two levels very closely off the higher time frames. If we resolve bearishly out of this, you know, I had pointed out in yesterday's video that we could potentially be having a massive double top here, and then tradable setups, you actually get a nice little double top inside the third leg or the second leg of the double top here, which might be happening here. So, you know, a trade through this 637.01 would set up this type of price action. And you can see here's a nice trend line here that's right off of the 38.2 fib. That would be my target area should we break down here. And you can see if we break down through these this trend line support, that there's a bit of an open hole here on the chart. So I could very easily see that. If we do come down into there, we might, you know, form a larger head and shoulders, and then a break of that neckline here would imply an even bigger head and shoulders pattern. And if that's the case, then again, if we're institutions and we're thinking about buying against this big bull market that started at 340, where would we be most likely to be buyers? And here's the 61.8 to 78.6 fib levels, with the sweet spot sitting right there at 441. You know, I think this is probably a few weeks away. This is total conjecture right now. We have absolutely no idea if it's going to happen. But the point, I find it very interesting that this OTE, or optimal trade zone, just so happens to be right back to where the market originally bottomed. So basically, basically what that would mean is that they're just going to back it up into support, and if the institutions really believe this is a bull market, and if they step in and put in a bottom here, this is where they're most likely to do that. So that's your sort of higher perspective. Do we have a double top here forming, a top within a top? Well, no, if we break through 637.01. Conversely, does the bull continue charging along? We'll know if we get a breakout through 672. So right now, still continuing this sideways action, and really just a big hurry up and do nothing right at the moment off the higher time frames. Looking at the 15-minute, for you slick intraday traders, you can see that, basically, this is this entire trading range. And I know this is a very busy chart, but bear with me. Long and short of it here, here's that 614 area, probably the bottom end of our range, and 685 is the top end of our range. And all we've done is just sort of oscillated back and forth, back and forth. It's interesting, these OTEs, where, if you had, on this initial sell-off, you had said, okay, I'd probably look for a move back into the OTE short zone. Gee whiz, that's exactly what happened on this rally here. And then conversely, off of the rally, you say, well, if I'm going to buy, probably look for a move into the OTE long zone. And sure enough, that's exactly what happened here. And all we've done is just oscillated back and forth. Off of this sell-off, OTE short sweet spot, you can see market rallied right back into there. What I find really interesting was that I was asked to do a 15-minute chart just a week or so ago, and that was off of the original range here, and I had suggested that it looked to me like the market was 652 to 6, let's say that one more time, 652 to 662. And interesting how the market is basically just sort of gyrated between these 2 points. We're looking a little faily here, below 652 now, and then there's that important 637.01 number. If we go down and break that, and then obviously that's your higher time frames breakdown here. But for the time being, that's the most you can say about this, is that now we're in this massive trading range, where the top is this, I suppose you could argue it's this 672 number way up here, and the bottom is this 637. So short-term traders, we had a nice little Willie stupid condition right here that you could have played a short against. We had a nice little momentum fail here, this morning. So that is definitely there. But as you can see, I don't think there's a lot of conviction in these moves. The conviction that I see is that we do get these big dump sells, and then we sort of consolidate for a bit. I don't really see a lot happening here on the volume. In fact, I might argue if we can recapture this 652 area, guess where we're going? Right back up to 662. All right, so that's basically a summary for today, sort of reiterating our general theme of late, that we're basically consolidating after a huge run-up, and not a big surprise we're doing it at the 50% level. Bearish resolution out of this consolidation, to me, paints a target of this 38.2 fib, 563 area. Bullish resolution out of this consolidation suggests 744. That's a nice 61.8, but ultimately, just off of this 2014 price action, we could realistically see 801. So keep your seatbelt fastened. It's going to be a wild ride. Last comment I'll make here. You'll notice how price went moving up, rather aggressively, which sort of followed this down move rather aggressively. And you'll notice that on the other side of this bear move here, we had some extreme volatility, right? So this was extremely volatile. There's no reason whatsoever why we can't do exactly the same thing on this side. So just as volatile as this action was here, one must be prepared for the exact same type of volatility here. So that's, again, sort of another confirmation of why we want to keep an eye on these downside levels. Market hasn't broken down yet, but if it does, let's make sure that we have realistic expectations going forward. All right, that's your summary for Monday, June 9th. Have yourselves a great trading day, and we'll talk to you tomorrow. Bye now.